Many beginners believe this: if war involves the United States, the dollar must fall. It sounds logical. America at war, instability, debt, chaos, so the currency should weaken. But it's wrong. And this misunderstanding destroys trading accounts. Markets do not think politically. Markets think structurally. Let's break this down. Markets don't care about emotion. When news breaks, war, sanctions, missiles, retail traders react emotionally. But institutional money asks different questions. Where is liquidity? Where can I settle transactions safely? Where can I park capital without counterparty risk? What currency dominates global trade? This is not about patriotism. This is about plumbing. Liquidity is king. In times of crisis, global capital does not look for moral positions. It looks for depth. The US dollar market is the deepest, most liquid financial system in the world. US Treasury market is equal to the largest bond market. Dollar funding markets is equal to global backbone. Most commodities priced in dollars. If you are a fund manager during war, you don't say, "I dislike US foreign policy." You say, "I need immediate liquidity." And liquidity lives in dollars. Over 80% of trade dollars transactions are settled in US dollars. Oil, metals, international shipping, corporate debt, all dollar based. During war or crisis, global trade slows, but settlement risk increases. So what do institutions prefer? The currency already embedded in the system? The dollar is not just a currency, it is the global settlement rail. Here's the deeper layer beginners miss, and that is risk transfer mechanism. The dollar is a risk transfer instrument. When emerging markets panic, when capital flees unstable regions, when investors dump risk assets, they buy dollars. Not because America is perfect, but because the system is built around it. The dollar becomes stronger during global stress, even when the stress originates from US involvement. That's the paradox. Let's see the historical pattern. Look at history. Gulf War, 9/11, 2008 financial crisis, COVID. In almost every global shock, the dollar strengthened first. Why? Because in chaos, capital flows to the most liquid system. And right now, whether people like it or not, the system is dollar based. And there is important clarification. This does not mean the dollar is invincible. Long-term structural decline is a different debate. Debt levels matter. Geopolitics matters. Multipolar currency shifts matter. But short-term crisis response, the dollar often rallies. Beginners confuse moral logic with capital flow logic. Markets don't vote, they reallocate. If you want to trade professionally, you must think like capital, not like a headline reader. War does not automatically weaken the dollar, and liquidity demand strengthens the dominant settlement currency. That is the hard reality. If you found this valuable, subscribe, because we don't trade opinions here, we trade structure.